Well, welcome, ladies and gentlemen. This is Rob. Welcome to this week's update of Power Hour. Let's go ahead and make sure everybody can hear me. Please go ahead and type the number 1 in the questions box if you can. Hey, Jim. How you doing, sir? Good afternoon, Brenda. Hey, Marianne. How are you? All right. Welcome, 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 one and all. A lot of new names in here today. Welcome if this is your first time or if you are newer. Afternoon, Kevin. How are you doing, sir? Fantastic. Good. Folks, I can't even see all of the names as they're flying by on our text chat. I am doing great, Kevin. It was a great weekend. It's been a great day so far today. So life is good here on this end. Let me go ahead and add one more thing. Oh, there it is. Okay, just trying to find what monitor it moves the camera to. Welcome. Hopefully the psychedelic fan on the ceiling is not messing you up. Hey, Chuma from Canada. Excellent. Yeah, we've got people from all over the world, people that check in from the Middle East and Saudi Arabia and everywhere else. So welcome, welcome. Hi, Martha. How are you? Fantastic. Well, beautiful. All right, let's jump in, guys and gals. So we've got coming up tomorrow, Monster Market Movers. This is going to be an important one because of what's happening with the market yet again. Mastermind group online is on the 23rd, the 18th and 19th. This week is our Mastermind group live 2020. We'll be doing that from 9 a.m. to 1 p.m. Trading You is on the 24th, and Mastering the Trade, which is for those that are in power option plays, is coming up on June 30th. Now we've got some free trainings this week. Guys, Brandon has done an amazing job in the E-mini think tank. Truly phenomenal. He gets asked all the time, what are you doing? You got so many strategies. What can you do? Can you kind of hone in for me your best and favorite ones? And he put it together a free class, a free training called Top 3 Trading Strategies. We did one last week already. He's got the 16th, which is tomorrow, right? Yeah, today's 15th, at noon, then the 23rd at noon, and the 25th at 8 p.m. They're all the same class, but guys, you got to get yourself registered for one and see what he's doing in there. He'll simplify and walk you through some steps of the things he does and why he does them. We've got Power Hour each and every Monday. And then, of course, you've got E-mini Think Tank, Pop, Power Option Plays, and Covered Call Explorer all throughout the course of the week. So welcome, welcome, welcome again to those of you that are here today. Kevin said, Brandon brings futures to the next level. There you go. Excellent. Hey, Robert, glad you made it, sir. Glad you made it. All right, here's our follow us page. If you are not following us, if you're brand new here, make sure you follow along with some of the various videos and things that we're doing out there. And we've got videos all over. There are videos on YouTube, videos on LinkedIn, videos on Instagram. Make sure you're tracking along with them. I just shot a video now. Sean doesn't even know I did it. It was how we did last week with our trades, and I'll share that with you guys at the end if you would like to see what we did last week. But go ahead and start following along with it. Our Wealth Builders HQ's official office reopening is tomorrow. Now we've got a cleaning crew going in there today, not because of anything with the virus, but everything to do with it hasn't been open in 3 months, right? We literally have stayed out. Sean entered the building one time to go get some things 2 months ago. So we're going to get it cleaned up today. Tomorrow, between today and tomorrow, we're going to move some furniture around to get some social distancing a little bit better. And then Sean will be back in there tomorrow full time. And we'll be back to shooting videos full time on Wednesday from in the office. So I cannot wait to get that done. I like this camera here, but I like much better when Sean does it. And we've got a much better structure than with this little webcam that we've got on the computer here. So make sure you are following along with us on the various social media platforms. All right. We're down only 181 points. Folks, this has been an amazing recovery today. Absolutely phenomenal recovery. It's been such a good move. There's such high volatility today. TradeStation is working horribly as far as responding. And I know it's not just TradeStation. I had a meeting earlier today with Amelia and Sean, and both of them are seeing problems in their TOS platforms today, not responding. Amelia is sitting there, yeah, and Robert typed the same thing in, so is TOS. It's the volatility. The systems are just not built for this many trades, this many users, this much activity, and this much wacky pricing. They're just not built for it. So we've got our SPY. You can see where we closed right at this red candle, the bottom of the red body. So 304-ish, we're at 303-ish right now. So we're about $1 away, considering we were down at 297-ish, right, today. We've had a major retracement and move back up again. Great structure, great setup. If we go ahead and add pivots in, which I take them off when I do some of my analysis over the weekends, go back in and add pivots, you can see that where we closed is a pivot point. Where we gapped down to was Friday's, one of Friday's pivots, but when we got back above the, what does that put us at right there? 299-ish level. We got back above there. There was the bullishness of move back up, retest, bounce. There's the potential entry into our trade. We would have scaled out halfway through, right? As we always do with Fibbits, they're called, right? Midpoints. So we would have scaled out halfway through, right about that 300, 301-ish level, somewhere in that range. So overall, not too bad of a move. And that's just on SPY, right? It's just, this is just the simple structure of just trading the most basic vehicle out there, the spiders, the S&P 500 in mini size form. We're down 12 points right now. We're actually up 17.5 on the NASDAQ right now. And the Dow is down 170, but we were down over 500-600 points today, right? Depending on whether you're looking pre or post, pre-market or once the market opened, right? So overall, the recovery's been good. The big question that has to come out from you, or type that out first, the big question you've got to get out of your, from your brain to your, I'm not saying this right. The thing you've got to think about, consider, be most concerned with is what's going on with the overall market right now, right? Let's see. So we're a little bit behind on, this is the 15th, so it's today, but it's a little bit behind as far as delay on the S&P. It's at 1153. We've had more recovery than this at this point. But here's the problems that we're running into. Very first thing is all of this coronavirus stuff, it ain't gone away. The I'm 25, I can't get sick, I don't care type stuff are seeing places all across the country having massive resurgences of people getting sick. I did not watch the governor today of New York, Cuomo, to see where we were at. We try to watch him whenever possible. I'll go back and catch it on pick it up on YouTube later on. But yesterday we saw our smallest number of deaths ever since we started recording. And the first day we recorded, we were at hundreds, right? When it was officially known that, yes, it was coronavirus. And we were at 20 something yesterday, which for us is very small. I understand there are places that are getting resurgences that are not seeing those numbers, but you also don't have 19 million people in your state, right? For some of those places, the South Carolinas and things like that. But there are places around the country that are having some problems. And whether you agree with it, disagree with it, you think the scientists are lying, the politicians are lying, well, of course they're lying. Their mouths are moving. They're always lying. Whether you think they're lying about this or not has nothing to do with it, right? What it comes down to is the market is concerned. I don't care about your opinion. I don't care about my opinion. I care about what the market does. Because here's the thing. Just because you say I'm going to take $1 million, $10 million and throw it at Apple, that doesn't mean you're moving Apple. You might get a blip right now and then watch it come back again, but you're not moving Apple based on your trade. All right, it's just not happening. You're not moving the market based on your opinion. The market's moving, your opinion needs to be, how do I take advantage of the move the market is making? We can have higher probability beliefs and understandings of where the market's going, but you still are not in control. Because if you would have asked most traders last week, and let me rephrase that, let's just say most individuals, last week, is the market going to come crashing down right here? The answer would have been absolutely not, man. We're rocking. We're going to go for all-time highs again. You watch. We're going to hit it. We're going to nail it. And yes, I've been one of the naysayers through this bullish move of you better be cautious. I'm not saying there aren't trades out there. There are. We've capitalized on many of them in power option plays, many of them, right? There's plenty of things out there to trade, but to say I'm going to go ahead and buy something and go along with it right now might not be the best thing to do. You really have to plan out whether or not the trade is is the right trade or not for you and your risk profile. Hey, Trip. Right. Good friend of ours, Ryan, said it's like dancing with a gorilla. That's exactly it. You never know how they're going to react, guys. The volatility is there. You got to be very cautious. And here's the thing. This very faint blue line that's in here, right? It's a 233 moving average. It's a simple moving average. There's no X after it, right? Simple moving average. So must have a mail carrier outside. My dog wants to rip them apart. Anybody with a uniform, if that pit bull gets her or him, would not be good. So we're sitting at just about 3,000 right there, 3,003.54. We're dancing with that level right now, which has a confluence of 3,000 and 29.96.65, the fib level and the 3,000 point price mark, right? Well, what's going on here? We are right now in a neutral bias. So we do not have go bullish, go bearish. We have go neutral, go day trade, go very short term. Everything we did yesterday, every one of our candidates yesterday in power option plays or Saturday was a day trade. None of them were directional trade. I am not willing to put anything into a directional move right now. Why would I? With what's going on, we don't have direction. Why would I take a directional trade? Oh, but you want to get in ahead of the curve. No, I don't. It'd be nice to catch it early or on the earlier part, but I catch early on our setups all the time compared to where most people do. Look at a bigger picture in our, and again, everything is for educational purpose, but in power option plays, we call these trades out, right? And if you follow the rules of everything that we called out, the potential would have been over $600,000 up this year. Okay, huge, huge. It doesn't matter that the market was crashing down. Some of our best months were in this market crashing down. And then this is all slop in here. And then even here, it's all slop. Only in the last month and a half have we had a strong bull run. But we are overbaked as far as, is the economy ready for this? We're not. I'm sorry. Companies that are now having to work with less sales force, less manpower rather, are realizing that they don't need as many people. They interviewed a local bakery, and the bakery said, well, I had 13 people working for me, and we got laid off, and we went down to just about nothing inside our store, and we made some changes, some adjustments to how we do things, and now we're getting back into full swing of things, but I can do it with 11. I don't need 13 any longer. Now, he's not doing it because he just wants to cut staff. He's doing it because he doesn't need that staff. And you're going to find more and more companies doing that now as well. Our unemployment rate is not going back to where it was pre-COVID anytime soon. Oh, Robert, that is so bad. Robert said 13 people at a bakery sounds like a baker's dozen. Oh, that was horrible, Robert. Or ever, you're right, Trip, or ever. So exactly, Jim. Jim said on a daily chart, the S&P 500, here we are, SPX. Jim said on daily SPX charts, that is an island. Is that an island? Yes, Jim, up in here, we've got this little island right here. It's a standalone structure all by itself, right? Those 4 candles right there. Bada bing. Exactly, Kevin. It's exactly right. It's exactly right. Bada bing, bada boom. So, folks, what does this mean for us right now? Caution is the key word. Caution. I mean, if we continue this downward stretch or trek, right? We came moving down. Let me darken this 233 moving average up a little bit. Come on. Okay. Let's see. Let's put it down as thick just to make it easier to see because it is such a light color. All right. So what happened? If I grab a pen, and let's see what color they have assigned me today. Gray. I'm not a gray kind of guy. So gray it will not be. So here we had the 55 crossed down through the 233, right? Indicating the bearishness, right? That bearish cross. Okay, and then what happened? Then we started moving back, moving back, moving back. We were making this move up. We had not crossed the 55 back up through the 233. We were getting close. Look at where we were. Well, that's orange in there, right? So it's not working. Look at where we were right there. Right as the market rolled over, we were getting close. Just check the distance between these two lines, between the blue line and the brown line. Very close in there. We were getting ready to cross, and now what's happening? It's looking like we are going to see this take place again if we continue the move we're making now. It gives us that bearishness, that continuation of the spread of those two moving average, long-term, bigger picture saying, really not an exciting time for us to be taking long positions. So if we look even at a weekly chart, because now we're 1, 2, 3, 4, 5 days, right? So we look at a weekly chart, we're okay, we're sitting at the moving average. You look at a monthly chart, we're still okay, because we're very early in our, there's the monthly, we're very early in our change, in the shift in what the market has done. We go back to daily. You could see where we're sitting with that 233. This is a very critical place. 1 day, 2 days, 3 days, we have tested that 233 level. We need a decision made off of this level. If it breaks, I am looking big time at potential bearish trades. If we bounce, get me back up above the 8, and there's the potential for our long trades, our bullish directional trades. So Larry said, wouldn't this pullback in the SPX be a good place to redraw the fibs? It would be, Larry. I just won't do it here. We'll do it in POP. But yes, we could look to do it from that pullback in there. Absolutely. See, Jim said, now that it's an island, what does that normally mean technically? Well, the island itself is standalone. When you got the gap down and you pulled away is when it caused the island. Just the gap up by itself, you needed to break away from itself, right? So at this point, the island doesn't mean anything any longer. It's just showing you that once you had these 4 candles here and you got that gap down, if you're not coming back up and closing that up, that's the bearish island that's looking there, right? You want to check volume and see what volume looks like inside of there as well. Are you looking for stronger volume in the island, not what broke out after? We know we've got some bigger volume in here. This is on the S&P, so we had strong move up on this gap, gave us strong volume. Volume on this move up was lighter. We were lighter yet here, and this was about the same as 2 days previous. And then that gave us much bigger volume on the downside. And you can't count today's volume because it's today. We're not done yet. So making sure I keep up with Amelia. All right, perfect. Amy, I just saw that. Thank you. Thank you for the explanation. Oh, you got it. Absolutely. Absolutely, Jim. You're welcome, Larry. Robert said, so much truth in not rehiring some. As most of us know, if someone leaves a company for whatever reason, the existing personnel workload increases and they don't fill the position. Exactly. I mean, it's a tough place. It's a tough place to be looking for jobs right now. Right? What do you think right now is one of the top places where they're looking to hire people for jobs? What would you think with everything that went on with coronavirus? What would you think would be one of the top places they're looking to hire, professions that they're looking to hire? Me too, Erica. That's what I would think. Yeah, Amazon. Good point, Barry. Wasn't thinking about that. So a lot of people are typing in medical field, right? A lot of people are typing in medical field, right? Zoom. Yeah, good one too, Barry, right? Nurses, doctors, etc. Exactly. So I can tell you, my daughter graduated nursing school this year, right? She took her NCLEX, which is her statewide test. She passed. She already has a position starting July 31st in some very, very hard to get job that they put you through this training. You got to give them 2 years. They put you through this training. They basically start these kids with 6 figures coming out of nursing school, right? My daughter has multiple friends that graduated that cannot find a job. My daughter works in one of the Northwell hospitals here on Long Island. They have 34, it was either 34 or 36 patients still in the hospital that had COVID virus. This was 3 days ago, 3 or 4 days ago, her last day she worked, that she had work, right? 3 or 4 days ago. And there were only 34 people with COVID virus. People are not coming to the hospital unless you have to go to the hospital. We took my father-in-law into the hospital, not because we wanted to, because we had to, right? And it was empty. No roommate in his room. It was empty. What a way to start your career in the middle of a worldwide virus. I know, Jim. I mean, it's just, I feel bad for these kids. I mean, both my daughters graduated. They don't have graduation parties. We didn't make big deals about it. They both have birthdays this month. No big deals. My oldest birthday was yesterday. We spent it in a park with her boyfriend and both girls' boyfriends. Docs and nurses have been, I don't know what that word is, Suzanne, sorry. General MDs are struggling practices, surgeons without elective. Oh yeah, no, they're all dying. They're in big problems right now with medical field. Some rural hospitals are closing altogether. Yeah, Jim said 4 birthdays in June for our family. Yeah. For us, it's June and August. 2 in June, 2 in August. We're not planning on anything for us either. Certainly not going anywhere for our birthdays this year. All right. So S&P 500, guys, you need to wake up and look at what's going on in the marketplace. You need to be ultra sensitive to what the market is showing you. Forget your emotions. Check them at the door, right? Just forget them. Leave them behind. All right. You need to look at this logically and say, and here's looking at it, right? We got the camera on. So I do this all the time. We used to do it in E-mini Think Tank. I would talk about it, or when we do Mastering the Trade, right? If I'm looking at my excitement level for a trade right now, looking at a daily chart, if the market was closed and I'm saying, okay, this is a stock, and I'm looking at my excitement level, where is my excitement level at this point? Where would I be in my chair? And I would be back here. This is my excitement level. Just very relaxed, feet up off the ground, could close my eyes and go to sleep, right? There's nothing about that picture that says go long. I'm not talking about taking a day trade. There's nothing that says take a directional trade now. Nothing, right? If we get a bar, actually, let's do it here. If we had a candle, actually, you know what? I don't want to do that. Let me just do it with a pen, a drawing tool. If we get a candle, let's say that let's give it a crosshair so that doesn't get messy. Say the 8 is here, 21 is here. And tomorrow, or tonight, let's say, tonight the market is closed, and now I come back to look at the markets. And remember, I was sitting back like this. Now we're in a better place. I'm kind of sitting here. Not excited yet, but I'm better positioned to, all right, wait, let me take notice. The next day goes by and we close here, right? I went from, I don't care. That was back on candle number 1. And we'll just number these 1, 2, and 3. Candle number 1, I really don't care. Candle number 2, pay attention. Candle number 3, this is me sitting on the edge of my chair. Incorporate the 1, 2, 3 system if that works for you, right? If that's something that makes sense to you, incorporate it, add it in as part of your normal routine. What do I see when I look at this? What's my excitement level? Set your own ranges up, call them your own words, get your own gauges in there, whatever it is. But you need to start looking at this from a different perspective than the world is saying go bullish, so I'm going bullish. All right, so let me clear this off. All right, so yeah, no cruises, Jim, exactly. All right, so Jim said on SPY, we started to fall. We had a pullback on 3-4. The candle closed at the ADMA and the bottom fell out. We might be doing the same thing in these days, but I think you are explaining that now. Okay, so, and I wasn't comparing it to the 20th, Jim. We can look at those at that date, at the 4th rather. So let's see, I need more time. Give me more time. Need an F5. Okay. So March 4th is what Jim was saying. So I'm just trying to go back and find it. 2nd, 3rd, 4th. Okay. So right there, we pushed back up, got above the 8 right there. Right. So let me go back to it again. SPI, we started to fail. We had a pullback on 3-4, and then the candle closed at the ADMA, and then the bottom fell out. So I don't know if the bottom is going to fall out, Jim, but I don't think any trader that's worth their salt is not thinking that we're ready to go back up again and life is good. Because if nothing else, we have proven, or it has been proven, that the virus is not gone. The effects of it are not gone. You watch in New York City, right? 25,000 violations in the last couple of days since we opened up phase 2 in New York and Long Island, right? New York City and Long Island. And these have been reported. The governor is threatening to take away liquor licenses. They're talking about giving people summonses for open containers, right? All of these things, we're going to see some of these same resurgences happening. It's not going away. Now, we expect it to get worse, but how much worse? When South Carolina, I think it was, is at 85% capacity in their ICUs, that's bad. That's a problem. That's a serious problem, okay? I don't think we're done going back down, and I'm not saying this is the point. I told you what I thought, my thought was. Right now, where are we? We're at the 233. That 233 and the 55 are critical. Break those two, the blue line, the brown line, and now we're ready for bear, right? We're hunting bear. We're not hunting bull until we get above the pink, and we're not there. So where are we? In between. So what do? We have strategies for trading the in between, but they're not directional trades that I'm trying to pick as an early entry into a stock. Yeah, Brandon said Arizona too. Oh yeah, there's plenty of them. There's 22 states that are seeing resurgences. Yes, Robert, and you'll understand why we're going to leave it at that. At yes. Right, Jim said correct. No directional trades. Yep, exactly. And Karen, listen. All I can do is go by what the numbers are out there. Karen said, or so they say. I understand. I get it. Is this all some government conspiracy to mess us up, get more control, more socialism, bring more of the socialist type medical system in line? Absolutely, I do believe that is part of it. And is that driving it, or is that the after effect or trying to take advantage of it? I think it might be trying to take advantage of it. But that doesn't mean that there are not agendas inside of here. There absolutely are. Yeah, no, I understand, Karen. I get you. I do. But the market is going to react to what's actually happening or being, we're being told is happening out there. Whether it's real or not, it's what we're being told is taking place. So, all right. When you look at what's going on today, let's see. Let's reshape that or resize it. Karen said, yep, I agree with that. And trade as such. You have to. You have no choice. So Apple, let's see. So we've got a couple of stocks up today, Tesla being one of them, right? Tesla basically saying, yeah, I don't really care. Down, pushed, we hit the pivot, came back to the moving average, came back for the retest, and there's the bounce, right? So Tesla being one of them that are up today very nicely. Chipotle Mexican Grill. Second, the cleaning lady decided to rearrange my office today. She took my folders, which are sitting this way, and she turned them this way in their holder. I have no idea why. Oh, I'm looking for, let's see. Chipotle, I had it down as a neutral bias. We had everything down as a day trade. I said that earlier. Everything was a day trade for this upcoming week. I'm just not willing to throw hard-earned money at $640,000 at trades that I just don't know are going to work or not. So Chipotle Mexican Grill, we had a neutral bias on Chipotle, right? So we go back and look here on Trade Nav at CMG. Even Trade Navigator is slow today. I mean, it seems every data provider, because it's not their data, they're buying the data from somebody else. But so Chipotle, if it stays where it is, has moved in. It still would be considered neutral bias. We've got to get above the 8, which is 1017. We'll call it 1018. 1018. Where are we? We're at 1010. So we have about $8. But what a great move off of the pivot point as an intraday setup. So we've had some really nice overall moves, bullish. When you look from a bearish standpoint, we still have some ones that are down a bit, right? Booking being one of them. They're down $18.50, but they were down, let's see, closing price was $16.25 and opening price was $15.68. Call it 65 to 25. That's 35, 40, 50. It's a 60-point drop on the open. Now, not huge for a booking. Let me rephrase that. It's huge for anybody, but it's not uncommon to see large moves on a booking. Hey, Will, glad to see you, sir. Yeah, Will said the servers now have coronavirus. Okay. Yeah, good point, Deborah. What about it, Jim? You said you were just going to bring up Apple. Yeah, Karen said a great lesson in emotion. Oh yeah, absolutely, Karen. It's what we've got to look at. It's what we've got to deal with as traders. Suzanne said, like you say, it only matters what they report and what is believed by the market. My friend is in the Charleston Hospital area. Hospital CEO not at 85% capacity ICU. There you go. So the information's out there, whether it's accurate or not. So Karen said, seems like a weak bull market or lots of bears. Yeah, so right now it's just very up in the air, Karen, as far as what we're doing. And I don't want to try to pick direction when I don't really have clear direction. We were in the S&P 500 a week and a half ago. Oh, how did that happen? I put $ SPX and I got CMG back. Interesting. All right, so we're up here. Absolutely, we're pure bull. We are rocking. Life is good, man. Just keep chugging along. Keep going. Keep pushing. Right? Keep fighting a good fight. And then this happened on Thursday. And everyone, whoa, wait a second. Right, now things change. Yeah, so Jim said Apple, it might look like it will be going back up. Apple is its own, not only is its own stock, it's its own index. I mean, they are their own thing, regardless of what the rest of the market does. Larry said yesterday, with Apple closing near the 8 on Friday and heading up today, you still wouldn't take an aggressive trade on it. I called it as a day trade, Larry. So nope, I am taking, because for me, it's not going, me personally, it's Apple is going up, but I'm still concerned about the rest of the market dragging it down. So I would take a day trade on it, no question. Yes, I would definitely take a day trade. Now that's my risk profile, Larry, right? That doesn't mean that for you or someone else, you say, well, Rob, you're right. Apple is an index, and man, if they're going up, I'm taking the trade. that's okay. As long as you know the risk going into the trade, then you're good. Yeah, life was good before Thursday. You got it, Erica, for sure. My point, Karen said, my point is day trades are tricky too. Have to catch it, see it right, set your alerts on 5-minute moving average pivots. So one of the things that I have done, if I can make this a little bit bigger, I definitely need to remove the pivots for you to see it better, because pivots, these person's pivots scrunch the chart, okay? You will notice that there is a white line, white moving average inside of there, right? If you look to the left, where this green candle is about 11:25 this morning, right? You'll see that white moving average that's in there. If you look up at the top of the screen, let's see if I can see it in here. I see the 21 is yellow. I see the 8 is pink. There's parabolic. I can't see the numbers on the top of this screen on this chart. There's just too much on the screen. But I can tell you that the moving average settings are 7. It's a 7 exponential, right? See moving average exponential to 7 exponential moving average. But Rob, you have an 8. Why do you have a 7? I have the 7 for no other reason than I can set an alarm, Karen. Right? Enable once per bar, enable continuous, which is how I normally tend to enable. Right? And now if this, who is this? Booking. If booking tends to pull back and hit the 7 moving average, it kind of pre-warns me. It pre-warns me that, hey, we're getting close to the 8 and looking for a bounce. Right? That's the reason I did it. That's why I've got a 7 on there. So it's just it's an early warning system. Yeah, Karen said Brandon's 89.8 cross is amazing. Absolutely. Absolutely. He does a great job with that setup, right? It's a good setup, a good structure. I used to use an 89.34, right? There was a trade setup I did a very long time ago that worked for many years, and then it stopped working. I haven't gone back to it ever since. Let's see. So Leslie said, not complaining, was in puts on the SPY and cleared almost 2K with the drop. There you go. Hey, I love it. Larry said, nice pearl there. Yeah, and you know, that's what it is, Larry. That's why you guys need to be here on Mondays. You know, I still, after last week, I have friends of mine, I told you last week, those of you that were here, that are traders, and gave me all kinds of grief for not charging for Power Hour. Like, you are nuts, man. You could be cleaning up on Power Hour. Why are you giving this away for free? And then they watched it last week, and the major amount of in-depth detail that we gave last week, right? They're like, all right, we changed our mind. It should be $200 a week, not 100. You're giving away way too much. You need to cut back. And some of these are educators that have their own companies, and they're like, come on, man, you're making the rest of us look bad. I'm like, well, give your students something that they can work with. Don't give them this fluff. I'm sorry, I'm going to get on my soapbox for a minute. Don't give them this fluff crap, right? Give them something that works. Stop teasing them and not giving them anything. Give them some stuff that works. This moving average thing that I just did, it works. Why do I do it? I've never done it before. Well, I haven't done it in a long time before. Why do I do it? Because the markets are so wacky. I need something to catch it early. My early warning system. Sounds like I may need some new friends, Robert. I get you. I get you. All right. Soapbox is over. So you look at booking, right? You can see I've got an alarm set up on there right now, right? On it, we're not moving anywhere. Nothing's really happening. Let me see if we have time. I definitely want to make sure we get some candidates in here today. Let's see. How about Facebook? All right, let's see. We've got about 20 minutes left on Facebook. Let me see if I can't set up an alert. Well, it's on this chart, so we're going to be good. It's right. It'll work. If we get it, we'll see it pop up. All right. So Chuma said, Rob, what are your moving averages again? So Chuma, I use a couple of different ones. Right. My primary moving averages are 8, 21, and 55. All right, there it is. You see it hitting the 7 right now? You hear that very annoying Aruga sound, right? That's why the continuous. It's just, if it's happening, I want to hear it, right? We're pressing, right? So I'm going to go ahead and disable because it's becoming annoying now. It is the 7. The white line. No. Okay. Who said that about 7? Okay, so Chuma, these are my primary moving averages. The reason for the 7 is only to give me an early warning as it's hitting up into my 8, getting ready to hit the 8. That's the only reason for it. Right? 8, 21, 55, these are all exponential. By the way, I said it, I didn't write it down, right? Because that annoying sound came in. Right? I also use a 5 that's exponential, but that's for an exit on a trade setup. Right? Then I use a 233, and you'll notice you got 55 and 233. Well, that's the equivalent of what the average person would look at a 50 and the average person that looks at a 200. Right? Why do people have 50, 100, and 200? Does anybody know why these are the moving averages that they do? What's the reason for those 3 numbers? And I'll go back and look at the chat real quick and see if I missed anything. So Truman, does that answer your question? Okay, you typed in thanks already. Beautiful, good. Because everyone else does it, right? Retail people, it's the norm. Right, Robert, that's exactly what it is. All right, so 50, someone said, well, we've got a 50 moving average. What it's kind of a round number. It's in between, right? And it seems like a good number. So why 100? Well, 100 is double 50. Why 200? It's double 100. Why are they there? Because someone came up with these arbitrary numbers and said, this is what we're going to use. Institutions, look at these numbers. For what? What viability does it have in the market at all? It's no different than saying we're going to use a 10 and a 20. Now, I'm not saying 10 and 20 don't work. My 8 and 21, you will notice very little difference between the 10 and the 20. Very little. The difference becomes the sweet spot, the tweak, the management, the mechanics behind the entry. Why do things fail at the 10 and 20? Self-fulfilling prophecy. Why do they fail at the 8 and 21? Human emotion. The secret is humans don't know that their emotions are causing it. That's why we use Fibonacci's, so they can hurt off the novices. Exactly, Mo. Yep. So those are the ones that I use, Chuma, sorry. All right, let me clear this off. Guys, let's go take a look at some candidates. What do you want me to look at? What stocks do you want to view today? Drop your symbols in. Microsoft. I don't know who put it in. Let's see, Stephanie. Okay, I just saw the symbol. All right, so Stephanie, look where we are. And it takes a couple of seconds for us to get the intraday data. You'll see the last candle pops in. We gapped down into what would be known as a neutral bias. We were bearish neutral before today. We're bullish neutral rather, sorry. We're bullish neutral again right now. If you get above the 188 level, On a close, we're looking at 191 and 198 as our two upside targets, right? If we break, I'm not interested at all until we can get some clear direction. Right now, the market, this is showing, excuse me, this is showing bullish. You could take the swing trade if it fits your risk profile. You could take a day trade utilizing that 191.32 as resistance. Let's see, Tripp's got his 3 in there. Micron, MU. So is that earnings correct, Tripp? Are they confirmed yet? Are we back at earnings already? 629? Yes, okay, so Tripp said it is accurate. So right now we're sitting at a neutral bias. I like the moving averages of where they are. You get back above the 21 and we're good to go as far as bullish. We still need the market to get there, but from the standpoint of a position, a stock, we're pretty close. AMD. AMD is just a mess. And what I mean by that is we're up and down, up and down. That's a tough call. We had a good move up there last week, but that's a tough trade with how much we're up and down with our moving averages. That's a tough directional move. And then IBM. What do you mean NASDAQ, Brenda? IBM. Ooh, yeek. So we're not in a true bear, but we're getting closer. QQQ. Okay, Brenda. We're getting closer to that true bear in there. It looks like next downside is 113, Trip. On the upside, 125-ish. Somewhere around there. Brenda, you're welcome. That was IBM. All right, Trip, hope that helps. The Depot, Home Depot. We had them down as a neutral bias the other day, Friday. They're still neutral right now. So 231. So we had this down as a day trade. So as an aggressive trader, would it have been okay to take this trade today? Well, if you have, and I'm going to write some numbers down here, 239.25 is our fib, and then 231.55 is our next one. So if we have, let's see, Home Depot, we'll look, right? No, not S. Home Depot. All right. Want to get the whole day in there. So now I want to snap a line in there at 239.25. $239.25. Right, there we go. Let's go back and look. We had already closed down below the moving averages. We gapped down below that 239 quarter level and came back up. Did we test it and fail? That could have been a potential bearish entry into the trade. And the answer is absolutely. You could see right in here, we pushed up one time, we pushed up again, we failed, guys. We had that rounding top pattern and we failed. Is it a big move down? No. I mean, we failed at 239.25. We're at 237.25, let's call it, $2. How far down does it go? Well, in an ideal world, we would see it make its move down towards that 231.5 level, right here, our Fibot, which has a confluence, mind you, excuse me, with the 55 moving average. Okay. So I like it. Potential day trade, but that's all I would do for it. All right, so I was actually Trader Will and David had put them in back to back. It's like you guys are sitting next to each other. ZM. Zoom. Their option prices are absolutely freaking insane. So let's draw a new fib on here. We've violated the previous one. Drag this all the way out to the right, 224 to 244. We've got about 20 points in there. We don't need a fib in here, so we're good. So Zoom was Erica. So Erica, I am looking with Zoom. Now we got our break above. This is what's called a zero line breakout trade. All right. We got the breakout above that zero line. In an ideal world, Erica, we're looking for a pullback to the 224.46. What does pullback mean? You've got to make a decision. If I can find my mouse, where is it? All right. So let's try that again. You've got to make a decision there, Erica, what the pullback for you would mean. Right? For me, I would want to see, well, regardless, the zero line breakout is we can make a move up, you come back to the zero line and you bounce. Right? That's a zero line breakout. But the question is, if this is today's candle right now, what does a zero line breakout mean? What does a pullback mean? Does it happen intraday and bounce? It could. For me, it would close here where it is now. We would come back down and close here, and then we would take our bounce, right? Because this many times becomes a here kitty kitty. Now, I'm not saying that you shouldn't take the trade. That is your call. But from a standpoint of where's my best opportunity to be right, we made the move up, come back, close near it, retest it, bounce, and then take the trade. But either way, we break out, you retest, and you take the trade, whether it's intraday or end of day. Your call, Erica, on which one best suits your personal risk profile and risk tolerance. But I told you, for me, I'd rather wait for the pullback. And I'm very familiar. I love zero line breakout trades. I'm very familiar with this structure, with this setup. All right, so there's your next level at 245. Etsy. So Etsy took a nice bounce today, but the moving average was right in the middle of the two fib lines at 81.33 there. If we can get a close, Robert, a retest and a bounce, 85.5 is our resistance level. Shopify. I was talking about this with somebody today. Woo, baby. They came out and announced something on CNBC today that they're going to have another 150 vendors this year or something like that they're adding, big vendors, major companies. So we're talking about, just tremendous increase as the rest of the world is falling apart. Other industries are growing head over heels, So 724, let's see, we need an 800 in here. So let's make this an 800. All right. So, look at where we stop. So 724 to 44 gives me 80 points. I need a Fibon in here also. So let's add our negative 118 and our 118 and our negative 136. 118, negative 136. Okay. So look what's going on. Who asked for Shopify? So John, look what's going on here. We actually have created a zone. There we go. Just looking for the tool for drawing a box. We created a zone in here between 784 and 800, about $16. We gapped up and we ran all the way to 800, just shy of it. Pulled back, and now we're right at that Fibon level. Both of those major hesitation points. Could you use that in your trading, in your analysis? Absolutely. Could you have taken the trade off the 800, expecting it to go back to 784? Yes, you could have. For $12, $13 of that could have been picked up on that move. Right now, I'm not looking to take a directional trade. It's got to get more back into some level of confluence, normality, get me back to some moving averages or fib lines. So we're not there. Day trade would be my note on Shopify. Docu. Larry's asking for Docu. Whew. We had a phenomenal channel going on back here. So, Rob, why is Docu, right, taking off, which is DocuSign? Why are they taking off through all of this? Because people need to get documents signed and they don't want to show up at an attorney's office. So you're doing it online now. I'm signing more and more contracts online than anything else. You're welcome on that, John, anytime. So let's go grab a Fibonacci, right? We got this move up, kind of sideways, move up. There's our pullback. So we're going to come from that swing bottom to that swing top. Okay. So where did my mouse go again? Oh, there it is. Well, it's not like it's disappearing on the other screen. All right, sorry. So on Docu, where are we at? So I like the positioning here. Pull back to that 152, and we'll have the 8 near there, and there would be a potential entry. Rob, can I take the breakout? Yes, you could use this like a zero line breakout trade. Close here, pull back to the 382 level, and bounce. If that's the case, you're looking at 172 is our next upside target. Yeah, so Jim said, Docu, zero line bounce, 0.272 resistance. It's amazing. Yeah. Just comes up, hits, fails. Comes up, hits, broke. Is Docu Beyond Meat? Is the other one Larry was asking about, BYND. Another expensive position, right? So I like the structure of where we're at. This showed up this week or last week, I don't remember. I think it was this week on Cover Call Explorer, right, for a diagonal trade. So could you have taken the trade today on the break above 147.5? Absolutely. 22, 47, 57, 67. We don't need a fib in here. So resistance, which we've been to before, is 163.61. We've been there. It works. Right? So look for it to go there again. If it breaks the 8, you're out of the trade. Let's see. Brenda was asking for QQQ. All right, so NASDAQ, right? QQQ, NASDAQ in there, right? Of course, we hit all-time highs. We don't need anything that big, right? We hit all-time highs last week, right? Now we've got this pullback going on in there. We're still in the pattern of moving averages are still bullish, but we need to close above the 238.5 level. If we do, 252 is our next target. 38.5, 48.5. We need a pivot inside of here. So we'll split. All a pivot is a splitting of a level. It's a Fibonacci pivot. There we go. All right. So 245. And of course, look at where we failed on the all-time highs, right at the pivot. Right? So, Brendan, I need it back above the 238. There you go, Karen. IWM. M you put in, right? Yep, you did. Okay. Russell 2000. We had some nice move, nice move, nice move. 3 days in a row, we're kind of hovering, pinned between the 21 and 55 EMAs, right? Not a fan of this at all. 8 dropping rapidly. Right? We're moving sideways here, but we're seeing the 8 having a rapid drop. That's because that gap down lasts for 8 days long as far as how often it's referenced inside of our exponential moving average, okay, which puts most importance on today. So, Karen, if we get below the 55, there's a potential for bearish trade, but once again, until I see more market direction, I'm going to be a little bit hesitant to take directional. All right, so Jim said Alcoa normally starts earnings, correct? Unconfirmed for them is July 22nd. Okay, good, thank you. Roman's asking for Apple. Let's do this one. That'll be the last one. All right. Oh, well, we did. I think we looked at Apple already, Roman, early on. Did we not? Maybe not. I think we were looking at it, but not really. So we called it a day trade yesterday in power option plays. You got the move up to 335 level, and you got right up into that 340. So you got your resistance already on it. Again, Apple is just one of those companies of, is it gonna fight what everybody else does? And guys, here, look, listen, it's pretty straightforward, right? I just did a video on this. You'll see it coming out probably today, right? Here is our trades from last week. These are our trades from last week in power option plays. We were up $44,889 last week in power option plays. Rob, you can't make any money in the market right now. The heck you can't. I'm going to undo that only because that's just messes up all my 4s that are in there. You can't see what's 4 versus 10. The yellow sticks out, right? The heck you can't, right? And these were, what do we have for day trades? Not a whole lot. Actually, we had 1, 2, 3 of these 8 trades were day trades. The other 5 were directional moves, directional trades. Or 2 of them were day trades. Yeah, the last 2 were day trades. Everything else were swing trades. These 6 were swings, right? All swing trades. So we're up $44,000, almost $45,000 last week, $663,000. We need to be at $600,000 at the end of this month, right? I mean, we're well ahead of the game. So, Rob, I'm really just looking for some quick in and out trades. I just want something really fast. Okay, great. Here's today's trade du jour, right? Trade of the day or play of the day or whatever you want to call it, right? This was done on Home Depot. We took a credit. Now, this is Amelia. We call it the Amelia trade. Amelia took a credit of 70 cents at 10:13. At 11:32, she got out of the trade by giving 35 cents back. So she kept 35 cents on a $2.50 spread. Quick down and dirty numbers, that's about 16% that she made in an hour and 20 minutes. Are you okay with 16% in an hour and 20 minutes? This is Trade Watch Alerts. Amy, do me a favor. Would you please drop links to power option plays and Trade Watch Alerts into the chat box there? Folks, you want to check these tools out, right? And if you're uncertain as to what tools will work best for you, let me see where I've got it hidden. Here's the website. Right, if you go over to store, and right here, tool comparison, watch this video. We're not going to watch it, right? But it is 35 minutes long, and it goes through a comparison of our various tools and brings you to a chart. We don't have Trade Watch Alerts in here. We got to add them in, and I got to make some adjustments to the E-mini think tank. But you'll get the general gist. Can you day trade with it? Can you overnight trade with it, and so forth, right? So watch this to get an understanding of what we're doing. Right, Robert said 19.44% return on risk. There you go, Robert. I appreciate you doing the math for me. I just did it in my head. She is good, Will. Amelia is damn good. She's an amazing trader. She really is. All right, so let me see something here. So I'm not sure if Amy heard me or not when I asked her to put the stuff in there. So here's power option plays. Let me put that in. And let's go ahead and get our alerts for Trade Watch Alerts. Guys, if nothing else, go check it out. Right, market alerts. What do you mean, John, by what is the money on the trade? You mean how much did you need to be able to do this? Is that what you're referring to? So if it's the trade that Amelia did this morning, you needed $250 minus your credit. So $175 is what you needed to be able to do the Amelia trade. $175. Where is it? Oh, there it is. Okay. You need about $175 for one contract to do this trade. The profit on this was on the 170 was $35. Yeah, pretty good, Eric. I know. So what level do you need to trade in TradeStation, level 2 or 3 for the Amelia trade? I don't know their levels any longer, Jim. You know, I probably should look into that. I've always been afraid of doing a video on it because if they change it, then I have bad information in there. But let me take a look and see what I can find on that for you guys. So Leslie said, would Amelia be willing to do a class on how she trades? Amelia, would you be willing to do a class on how you trade? I know she's here because she commented before. That's correct, John. That's $35 per contract. Might be, Robert. Robert said the next level above covered calls. It just depends. So many brokers are now going to only 3 levels. Amelia is ignoring me. John said, from TradeWatch alerts, where did the spread trade get identified? You mean how did we identify the trade? We've got proprietary filters that we use for that, John, to find those candidates. But you can easily, if you just want to, you can go ahead, if you have our version of Trade Navigator, right? You can come down here if it's today's bearish day, right? So you come down to bearish spreads, and we've got 49 stocks that show up today of bearish trades as potentials for bearish spreads. So pre-built filter, there's about 20 of them inside of Trade Navigator. Amelia holds class every Monday night, doesn't she? For the mastermind group. Yeah, so Trader Will said that there are pictures of it inside TradeWatch alerts also in the members area. Yes. Will this session be on YouTube? Henry's asking. Yes, we usually get this. I don't know about today, Henry, but we usually get Power Hour on YouTube. Yep, we do. I just can't tell you when. Right now, we're in coronavirus changeover with getting our office reset up and ready to rock and roll, right? So, all right. So Amelia's working on whether or not she wants to do the class. So not yet. So we've talked about it already, guys, about Amelia doing something. She's just got 100 other things on her plate right now of what she's doing. She doesn't just want to get together and throw 10 minutes at you and say, there you go. She wants to have it as a very viable training. So, so Trip said, for clarification, it does not show up on YouTube, but it does, but it's like a YouTube video on the WBHQ website. So we did that. They're supposed to be showing up on YouTube. The WBHQ we only did for the last week's one because I don't want to leave the Fibit stuff out there, the Fibonacci stuff out there for the advanced Fib pattern that we did last week. That's why I put it there, but they should be showing up there. So, okay, that's good to know, Trip. I'll talk to Sean and see what's going on. So we do the analysis based on end of day, Robert. We're not using the WBHQ spread setup in there. We have a different filter. Yeah, so we pay for it. We have the intraday data from Genesis. Good, Henry. I'm glad last week's session was helpful. All right, folks, we're going to leave the room open for a couple minutes. I got to get going. I've got another meeting in a few minutes with someone from India. So I will leave you there. Folks, listen, focus on what you're doing. You need to have a structured plan in everything you do in your trading. That's from your capital plan. What are you investing? You know, how much money are you willing to put into a trade? That is from your educational plan. What are you investing in your education? Dollars and cents, time, each and every day, week, month, year. How much are you investing? Guys, I'll give you a great example. My very first training job that I had, position that I had as a coach, teaching live events, I went to 4 additional live trainings from different coaches all throughout the course of the year. And in a year, once a quarter, I went to another training. Why? But Rob, you're already teaching. Why are you going to training? To keep myself sharp, to see if I missed anything, to see if something new has come out, someone has a new idea, just picking up nuggets of gold. That's all it is. That's all I'm trying to accomplish there, right? You need to be in trainings. Power Hour is great. You need to have a little more structure as well. This is what we're trading today. This is how we trade it. Covered Call Explorer. If the stock does this, we've got 4 entry criteria for Covered Call Explorer. Close above the 8, pull back to the 8, wick to the 8, small move to the upside. If any of those things happen for your stock, you know what to do. You know what to do. And I give you the option to consider as a trade. Right? You've got to have your timing in there. When are you working in the market? All of that needs to be structured. This is not a time to fly by the seat of your pants, unless you want them to fly off, because that's about what's going to happen to some people with how they're trading right now. All right, ladies and gentlemen, you have a great day. Keep crushing it, and I will see all of you at our next Power Hour event. Take care, folks. See you then.